Ethical dilemmas in modern financial practices pose significant challenges for individuals and organizations. As the financial world becomes more complex, questions arise about the fairness, transparency, and responsibility of various actions, from investment advice to corporate practices. Practices like insider trading, tax avoidance, and predatory lending raise concerns about the broader social impact, and investors are increasingly held accountable for their decisions. With the rise of sustainable investing and greater awareness of corporate ethics, the financial industry must balance profit with responsibility. This article explores some of the key ethical dilemmas facing today's financial sector and their implications for all stakeholders. In this video, we will talk about ethical dilemmas in modern financial practices. So make sure to watch the full video. 1. Conflicts of interest in investment advice. Conflicts of interest in investment advice occur when financial advisors or institutions recommend products or strategies that may not align with the best interests of their clients, but benefit the advisor financially. This dilemma arises when advisors prioritize commissions, bonuses, or other incentives over providing unbiased guidance. It compromises the trust relationship between the advisor and the client, undermining the integrity of financial advice. To address this, the financial industry is pushing for stronger regulatory frameworks, transparency, and accountability to ensure that clients' financial needs are prioritized over personal or institutional gains. 2. The ethics of high-frequency trading. High-frequency trading, HFT, involves using powerful algorithms to execute trades at incredibly fast speeds, often in milliseconds. While HFT can enhance market liquidity, it raises ethical concerns about market fairness. Critics argue that it gives wealthy institutions an unfair advantage over individual investors and creates an environment where profits are made at the expense of market stability. Furthermore, the sheer speed and complexity of HFT make it challenging for regulators to effectively oversee. As a result, there's growing debate over whether HFT contributes to a fairer market or simply exacerbates inequalities in the financial system. 3. Corporate tax avoidance versus responsibility. Corporate tax avoidance involves legal strategies used by companies to minimize their tax liabilities, often by shifting profits to low-tax jurisdictions or using loopholes in tax laws. While legally permissible, such strategies can be viewed as unethical because they deprive governments of revenue that could be used for public services. Large corporations, particularly multinational companies, are often criticized for exploiting these loopholes, while small businesses and individuals bear a higher tax burden. The ethical dilemma lies in whether corporations should prioritize the moral responsibility to contribute to the economies they operate in over maximizing shareholder profits through tax avoidance. 4. Financial insider trading. Fair or unfair? Insider trading occurs when individuals with access to non-public information about a company use that knowledge to buy or sell stocks before the information becomes publicly available. This practice creates an unfair advantage, allowing insiders to profit at the expense of regular investors who don't have the same access to information. While insider trading is illegal in most jurisdictions, it remains a persistent ethical issue in financial markets. Critics argue that it undermines market integrity and trust, making it essential for regulators to enforce laws and maintain a level playing field for all market participants. 5. Manipulating earnings reports. Ethical boundaries. Manipulating earnings reports refers to the practice of altering financial statements to present a more favorable view of a company's performance than is accurate. This can involve inflating revenues, deferring expenses, or using creative accounting techniques to mislead investors. While some companies may justify these practices as a way to meet shareholder expectations or secure financing, they undermine trust and transparency in the financial markets. The ethical dilemma centers around whether it is acceptable to prioritize short-term financial gains at the expense of long-term corporate credibility and the well-being of investors who rely on honest reporting. 6. Impact of predatory lending practices. Predatory lending involves offering loans with extremely high interest rates, fees, or unfavorable terms, often to individuals who may not fully understand the conditions or have limited access to other financial services. These practices disproportionately target vulnerable groups, including low-income borrowers, immigrants, and people with poor credit. Predatory lending can trap borrowers in cycles of debt, leading to financial hardship and even foreclosure. The ethical dilemma here is whether it is right for financial institutions to profit by exploiting individuals' financial desperation, especially when their practices may contribute to long-term economic inequality and societal harm. 7. Greenwashing in sustainable investing. Greenwashing refers to the practice of companies or investment funds presenting themselves as more environmentally friendly or socially responsible than they truly are in order to attract investors. It is a deceptive marketing strategy designed to capitalize on the growing demand for sustainable investments without making significant positive changes to business practices. Greenwashing creates an ethical dilemma by misleading investors who are genuinely interested in supporting environmentally sustainable practices. This can result in investments that do little to address environmental issues and ultimately undermine the credibility of the entire sustainable investing sector. 8. The ethics of executive compensation. Executive compensation, particularly the vast pay disparities between top executives and average employees, raises ethical concerns regarding fairness and corporate responsibility. While executive pay is often tied to company performance, the large bonuses, stock options, and perks awarded to executives may be seen as disproportionate, especially when employees are struggling with stagnant wages. This creates a moral dilemma. Should companies reward executives for success, even when their compensation appears excessive? Or should there be a more equitable distribution of wealth within organizations to reflect broader societal values of fairness and social responsibility? 9. Data privacy versus profit in financial services. In the financial sector, customer data is a valuable asset that companies often use to improve products and services, target advertising, or increase profit margins. However, the collection and use of personal data raise significant ethical concerns regarding privacy. Financial institutions must strike a balance between leveraging customer data to remain competitive and ensuring they protect individuals' privacy rights. Ethical dilemmas arise when financial services companies use personal information without consent or fail to implement adequate data protection measures. The question is whether profit can justify potentially infringing on privacy, or if customers' rights should always come first. 10. Responsible investing, balancing profit and ethics. Responsible investing involves considering both financial returns and ethical factors, such as social impact, environmental sustainability, and corporate governance. Investors face the challenge of balancing the desire for profit with the need to make ethical decisions that reflect their personal values. Ethical investing often requires sacrificing higher returns for more socially responsible choices. The dilemma lies in whether it is acceptable to prioritize ethical considerations over maximum financial gain, or whether profit should always come first in investment decisions. Striking this balance is key to making responsible, values-driven financial decisions that align with long-term goals. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.